folks, Dan Frio here, the Mortgage Update, and today is September 10th, 2019, and we got crushed again today. And I'll go through some technicals with you, but there's no financial news coming out, really, that's causing any of this to happen. It's basically all technicals. And what I mean by that is, basically what people are pulling out of the stock market's really not doing anything, but people are pulling out of mortgage-backed securities and getting into bonds. You can see we're good all across the board. Prices are up everywhere. That means money's flowing into these. The 2-year and the 10-year are playing piggyback. This is the inverted yield curve that we talk about. So they're basically, it's not inverted anymore. It's right there in line. So that's kind of not bad. But let's get on to what happened in the market. The Dow was up 73, so nothing huge there. NASDAQ really no moves. You can see the indicators, the averages, no big percentages there. Gold was down, which was kind of odd, but again, inflation's in check. Here's an article that I follow, and if you check out some of my social media, I post this quite a bit because it's a newsletter that I follow. And this kind of gives you, so you don't think I'm nuts if you're working with me right now, and you're like, Dan, well, wait a second, rates are coming down. Why am I not getting this? So this is an article that I follow daily, along with about 3 or 4 other analysts. And basically, it says, mortgage rates we hit the low, then we popped up to where we were basically back in August. So we hit a short-term low there. You can pause the screen right here and kind of follow this. You can see it's, most lenders are back to where they were in August. And they just keep, there's no rhyme or reason to this other than, people just moving money from place to place. Here was a thing that I kind of found interesting. So right here, what should you do? Simply put, if you're being quoted 3.75 on a conventional 30-year fixed, ask your lender what it would cost to buy the rate to 3.625 and see if there's an additional savings. It might not cost you as much as you think. Right now I'm quoting rates. I was quoting rates in the 3.5 or 3.375 range. So I can beat these, but I still have clients that I was quoting at the bottom. And then the tough thing is on my part and theirs. If you don't reply very soon, the market's changed all day, every day, and I don't know what you might want to do. So if we have to wait overnight, it's like I monitor this all day long, but overnight I don't have any control over it. So you could see sometimes where you'll see the stock market, it'll open down 900 points. Well, if your stock got crushed at the open, there's nothing you can do about it. You just say you can put in a sell order at that point, but it's already factored in. And unfortunately, that's what's happening to me and a lot of other lenders right now. Is we aren't covering our positions overnight, and it's hard to do, especially when the rates have been getting better and better and better. Then all of a sudden, your stock price is up, $2 a day, $2 a day, $2 a day, and you keep following. You're like, okay, I'll sell off, what I think is a high. I might miss a little bit. But the next day it opens the market down 50. What are you going to do? So that's tough. So let's go over and see what happened. Here's the technicals behind this stuff. You can see we just put in a new bottom. And this was our bottom for a while here. So now that's our top. Now this is our bottom. So you see it was a bad day the last 2 days. I mean, we've given back a lot. Right in here. So again, if you follow this, down is bad. That's the price of the mortgage-backed securities, which is a bond that dictates the interest rate for mortgages. It's getting crushed, and it's going below. So let me go over this with you. We watch some technicals. Those technicals are the Fibonacci levels is one of them. It puts a floor, and in this case the floor right now is this, and a ceiling on things. So we usually trade between those ranges. So for a while our floor was created right in this range or right in this range. For a while this became our floor. You can see we traded a few days above this, so thus created this as a new floor. Right in here this made me nervous, and if you go back to my videos the last, probably earlier over the weekend, possibly, or Friday, my concern was right in here. not thinking we're going to get crushed. Here's some other support levels that I assumed we were going to hit. This right here is a 25-day moving average. So many times, that'll create a resistance level. It didn't. And then you have a 50-day moving average, which is right here, and that created a floor right here. So we're right at that 50-day moving average. So that's the average. So what's the average? Well, it's the middle. So we have a range to go. We can continue to sell off and interest rates go up, and that could come down to here, or it could start to stagnate and go back up. This is a dramatic drop. So you see the drop here, we picked it up. You see a drop here, we picked it up. My assumption is we're going to start easing up in rates. You're going to have profit taking here because there's been a big move in mortgage-backed securities. So again, this might be a little confusing to any new viewers, but go back to some of my videos and check out some of the things that I did. I have a video in inverted yield curves and what the federal funds rate is, what the Federal Reserve controls, but I try to do this every day if I get home in time to do this, to kind of educate you what's going on daily and what my position is and what I think tomorrow's going to bring. I'm not perfect. Right now, the indicators or all of the technicals are saying to lock. I'm still, it says right here, lock. This indicator says lock. This indicator, if you go back to this analyst right here, it'll give you the perspective, loan officer perspective. Bonds are selling off Tuesday. If you play defensive, I'm locking new applications closing within 45 days. Unfortunately, I'm going to have to go against that right now. I'm going to float these things because I think there's going to be a little bit of profit taking. Let's see who's right tomorrow. I could be right, I could be wrong, but if I'm a betting man, this is too big of a drop to continue to drop. And it's basically, this is like us losing, 500 points in the Dow with really no reason. So my assumption and my educated guess, doing this for 30 years, I'm assuming we've hit a short-term bottom. We're going to at least stagnate or get a little bit better in the next few days. So I'm not locking, but all the indicators are showing a lock. So that's it basically for today. Appreciate you watching. Please don't forget to give me a thumbs up. Please subscribe. If you're not subscribing, please subscribe, click the bell to give out some alerts, and share this with any friends, family, neighbors you have. And if you're in the mortgage business or you're a realtor, follow back daily because I'm sure you can learn something, at least, be educated when you're talking to your consumers and your buyers. So God bless. Have a great night.